Good day, all. Ira Epstein of Linn Associates with your agriculture update. And this is for Wednesday, and this is the 7th of August, 2019, just after 3 p.m. Central Daylight Time. And as you can see in the grain markets, we did manage to finish the day higher. Grains are in a wait-and-see period. They're going to be getting some important grain numbers. We'll get an idea a bit more about yields coming out and supplies early next week. And then the all-important number on August 12th, which will be the corn acreage number according to the new surveys. And I'm seeing numbers all over the board. Today, as you can see, the dollar was down early. It's managed to recover, and a stock market, this is not wrong. You were down 600 points lower than this almost. And you can see how the market has come back. So another successful test of the downside in that market. Bonds and notes were sharply higher than where they're at right now, and that tells me maybe we got a little bit of ahead of ourselves to that area. Now in the soybean market, for the week, as you can see, we're down 1.5 pennies. So we haven't really gone anywhere. We've held on to the loss that we've had, especially since that 906 high, which was almost 60 cents ago in the market. And now the market has got a pattern, unfortunately, where the bias is down. And I define bias as where it's at on a closing basis in relation to the 18-week moving average of closes, and you're under it. I've drawn something new for you. As you know, we had a gap here in the market. This gap came in, as you can see, at 858, but I decided to draw a line along that low where the gap was. And my thought process is this market what we'll call a descending wedge? And if it is, if and when it takes out the high of the downtrend line, it could get interesting. In the meantime, you first got to get up to it, right? So when you look at this pattern, it is still overall a market that is churning. That's the word that I want to use. You've had a lower low, a higher high, and now you're spinning around right in this general area. When we look at key moving averages, the 18-day moving average of closes is way up here at 893.25, with the 200 above it at 903.75. When I go to Bollinger Bands, we had that stab as the market came from these highs. Actually, this whole high was from, if you think about it, the floods, the excess rain that we had drove the market up. We were getting delayed plantings in corn and other markets. And then as that worked itself out of the market, we've come down for this phase where I call it the growing phase. And you're still very much in that phase in the corn and the soybean market. So don't think you're out of that. You're fully still in it. But you're spinning here as the market's marking time, I think, waiting for next week's grain reports. When I look at momentum, it's bearish in soybeans. Whenever you have an embedded reading, let me describe embedded. You see these numbers, I'm going to come back here just where one of the numbers is in at 20. This is when both numbers that make up the oscillator of momentum called slow stochastics, at this point they're just starting to get into oversold territory. It takes a minimum of 3 days with both numbers under 20, as you can see, for them to change from being oversold to locking in a bear trend. Bear would be when both numbers are under 20 for 3 days or more, bullish when they're over 80 for 3 days or more. So now you've got, at this point, your embedded reading, and until you lose it, you look for the market to have trouble on rallies. Now, when it gets lost, and how it gets lost is by the red line closing over 20, and then the day after that, not getting back under 20 again. Very important the second day. But the first day is a warning sign, and often on that first day, if the trade is very evident that it's going to be over 20, a lot of traders just, if they've been in the market, let's say to the bear side, I find that they want to cover. They may not even realize what the embedded reading is, honestly. I've seen this over and over. They're just looking at market action, but what a stochastic does is measure that. Well, as you can see, you're fully embedded. Now, if we come to yesterday, you can see on this rally that we had, you had a 16 reading. Today, you're still basically there, even though the market settled about a penny higher. So I still call it an embedded reading. Lose it, and then I can make an argument for price and the 18-day average to have the potential to run at each other. In the meal market, I want to go to yesterday's action. Yesterday was a day where you had an embedded reading the whole time before it. You see that? You've got your more than 3 days under the 20. You lose it. And this is why so often I tell you. Now, everything looked right for it to stay lost today because it was in the top third of the day's range and a strong part to it. Yet the market today, by the end of the day, didn't lose it. So I wouldn't be surprised the traders got out yesterday, but I don't think there's an awful lot of buying going on in the market because you managed to get that embedded reading back. If you lose it again tomorrow, then I'll expect the market to get more of a punch to the upside. So what I think happened between last night's close and today is a lot of people started coming out of that particular market. And when we go to soybean oil, again, let's talk Bollinger Bands, these black dashed lines. 95% of the time the market will trade within them. And I contend that the first time you hit the line to the upside or to the downside, especially in a pattern that has been sideways, it's an area where the longs at the upside are probably coming out of the market to some degree and the shorts coming out to some degree. I don't know the degree, but I can tell you what goes on over and over. And if you look at it, you see more times than not you get that. Now, if you break out like you did here, out of a sideways action, and you come out and you don't do a bounce, it's not uncommon that if you can develop the embedded reading with it, watch out. The market all of a sudden grabs traction one way or the other. In the corn market, we had an embedded reading right here that we lost, right here on Monday. This is already Wednesday. Where did the market go to? The closest of the main moving averages, and often it will be the 18, but in this case it happens to be the 100. So that becomes the resistance point. And if you had a big follow through, then the 18. But the first number was met, and what have we done since then? We've spun wheels. That's pretty much about it. Now momentum is still pointing up, but as it's pointing up, the market is still in an oversold condition. When it comes out of an embedded reading, it typically gets from embedded bearish back to oversold and trying to work itself off of that. To get out of oversold, both numbers have to be over 30. You haven't done that yet. Resistance, I say still 415. Clear that. It might get up to the 424, the 18-day average zone. In the wheat market, I know today I had people come in my office. What do I think of the wheat? And we were looking at this, and overall you've had a lower high pattern, lower lows. Resistance, the 100-day average. So the first thing I was telling them this morning is, if you see that embedded reading hit, you've got to come, I think, out of shorts, look for a bounce. You got down into that zone, you're getting the bounce. So I wasn't wrong in the thoughts. I'm not bullish yet, or I am still in the bear camp is a way to say it, because you have now worked out of an oversold condition. The trend is down. You're fighting a battle between the 100-day and the 18-day average of closes. Get up and over 495 and close over that number. I'll tell you, you could all of a sudden then have higher lows, higher highs over that number and be looking at a bit of an upswing here. Who's in control right now? The bears. In the sugar market, back down for that new test of the lower Bollinger Band. Now, here you hit it back here and you manage to ride down with that embedded reading we've been talking about. Then you come back to the 18-day average and you played there for about 8 days. I'm going to repeat what I say over and over. The first challenge of a Bollinger Band, the low or the high, is where I often think pros are taking some money off the table. You got to it today. You hit 11. In fact, you closed at 1134 under that number, but it doesn't change my thought process that I won't be surprised to see the market lift back over it. Market's in a downtrend and literally falling apart as we're talking. Coffee market, be cautious here. I said it yesterday, I'm going to say it again. It seems to have lost its ability to continue a thrust to the downside. It's certainly been in a downtrend. It has the bearish embedded reading, but that number's starting to creep up a little bit. I think a warning sign for bears would be just getting over the highs of Tuesday. I think that was 97.75. That could get the embedded reading out of the bear side and just get something of a short covering rally going. First objective could be the 100-day average, after that the 18. I'm wrong if you take out, I think, Tuesday's low. Then you're liable to just continue on this trend down. In the cocoa, this is what you call, in all the softs, just letting go to the downside. They have been in a state of collapse. And you're still there with the embedded reading, but you've had no bounce at all. What else happened today? For the first time in a very long time, the 18-day average of closes got back under the 100-day. Confirmation this market's been in not only a downtrend, but it's had a structural change that's bearish. In the cotton market, be cautious here. Oversold. Outside day to the upside. To continue on the down, you'd have to take out today's low, which would also be under the Bollinger Band. And what did this market do? It spent, and we were talking yesterday, you finished yesterday at 58.72, which was under the Bollinger Band. You had 1, 2, 3 days under it, and I want to go back to this day because I don't think it was. It wasn't. 3 days under. It gave the market a probability today, the way that I figure Bollinger Band probability of 2%. Here's how I come to that. 5% of the time the market will settle under or over Bollinger Bands. I've gone back and done my studies. I recommend you do yours. Count how many times you find more than 5 consecutive closes above or below. The key word's consecutive. So a rule of thumb, and that's all the charting is, are rules of thumb. I mean, I wish I knew that this pattern works every single time. I don't think anybody knows that. Maybe algorithms do, I don't. And I'm looking then for a market to get a bend to the right-hand side of the Bollinger Band. Does that mean it's going to continue down? It could, because that band's falling. It's not a change of trend, but it leads me to think that you might be getting cheap enough where the market's going to pause a little bit. And that's all that happened today. Now the question is, do you take out today's low, or does the market begin a correction to get out of oversold territory with this, which could lead to another challenge of the 18-day average of closes? In the cattle market, you're running the lower Bollinger Band. It's like a magnet. You went down there and you just hung on it. So bearish in terms of momentum, bias, and trend is still down. Feeder cattle, unlike the fat, it does not want to, at this point at least, stay under a Bollinger Band. It's probed it, closed under it once, got back over it. There's nothing bullish about it, but there's also nothing super bearish. We seem to be in no man's land. Whereas the hog market, as I said to you the past, I think 2 or 3 days, I see it now starting to spin in here, not adding to upside or downside. It's like a pause in an oversold condition that still has a downtrend with lower highs, lower lows. Still very much a bear market. In the mornings, I get up, especially right now, we're so active. And I've already read on the past few days, by 5 o'clock, I've gone through, and I'm talking AM, the Asian markets, the European, I'm seeing what we're doing in the grain markets, and I start putting out for you chart analysis. Now I do this, as I said, first thing in the morning. I try to get it published for you, recording, rendering, posting it out there on our website at about 6:37 in the morning, that's Central Daylight Time. Sometimes it's earlier. I'm going to cover 40 charts typically on the futures markets, and I'm going to cover 5 ETFs. The charts will look like that with a black background. I'm not in them. The difference is, in those charts, I can actually say, buy here. Here's an entry point. Here's an exit point for you. This is the objective. This is the stop. Here's what I'm seeing in the market. It's meant for swing traders. That means I'm not trying to put out day trades, but I'm also not telling you to get in. Now let's buy the stock market on this current break and we'll hold it until next summer. You won't hear that from me. What you will hear are until we hit key points in a market. And I think that's what traders are looking for. That doesn't mean you can't take a long-term analysis. You can. But if you think about it, by the time you get up and you're going to go through your charts, the way that I do it, let's assume you were just looking at the meat market, because there's a meat video that you're looking at in agriculture. You just want these two markets. There's a slide bar on the bottom of the video. Just take your cursor, move it over. Those markets are the ones that you'll hear the recording on. You're welcome to hear all the rest, but you don't have to, is the point. There'll also be a lexicon on this side of the video, so you can just click on the name of that. It'll take you right to it. The idea there is if you want to see everything, you can. If you're interested in only looking at the markets that you want for that day, you have that as well. It's not free. It's 26.5 cents a day for the first 30 days. Now, included in that, you get my pocket, just like I carry with me right here. You get our what we call QT Mobile. It gives you quotes. It's going to carry my research in it. My videos are going to be in it. And if you download our app, put in your ID, what happens is I put out a push notification, not a text. It's free. It'll come on a thing. It'll say QT Mobile. Click on it. My video will play or whatever else. So you get it in a timely manner. It notifies you there, and I'm not using the text call to do that. Cost $7.95 for the first 30 days. After that, $15 each 30 day, or you can convert to a 1-year subscription for $156 for the whole year. Pretty good cost savings. Think about it, 3 cents in corn. A cattle, 1 penny's $400 or $4.20, so it gives you an idea. I price it pretty darn cheap. Plus, the QT Mobile's $40 a month. It's free with this. How do you get it? Call us. You can go to our website under education or research. You're going to see morning subscriber video. Go in there. It explains how it all works, and you can sign up for it there. I'm Ira Epstein. Have a great day.